It could get a lot worse. If President Trump goes ahead with this proposal, we will start to see noticeable increases in U.S. inflation as a whole. That will push up interest rates. Both of those things will dampen the economy. And if he really carries through, it's going to cost a couple of million U.S. jobs, dampen the economy's growth by 1 or 2 percentage points, could even throw us into a recession.
But Fred, you're saying it's going to get worse. Is it hard to criticize the tactics of the president at the moment when the GDP print is so strong and when there's been some progress with the EU at that recent press conference with Mr. Juncker?
It all depends on whether you think he will eventually get the Chinese to agree to a package to reduce duties. It's encouraging that he got an agreement with the European Union last week to start reducing duties and non-tariff barriers with them. That would be a wholly constructive outcome. I hope China will seek to join that party, come in and make a similar offer and try to get things back on a constructive tariff reducing tack in order to head off the tariff increases. We don't know yet. The fact that the economy is not strong does not comfort me very much, because if he goes ahead with the tariff increases and actually triggers a trade war, then the future outlook for the economy is going to be sharply negative.
But how reversible is that, Fred? And there is an optimistic view that maybe some short-term pain, but there will be long-term gain. And once they take off those tariffs, if there are some negotiations and deals made, as the president has promised, then they can just reverse it all.
Some of this is reversible and some not. Once you lose jobs, output, production, technology, it's pretty hard to get it back. So as our firms lose production and jobs because steel prices are up, if auto prices go way up, they may not be able to get those back so easily. That was the lesson in automobiles with the Japanese in the 1980s and 90s. That's what we could see again. So the best outcome is to threaten the tariffs, as the president has, but then come to a negotiated solution to head it off before the deluge hits.
The art of the deal, you could call it, if that plays out. Fred, just one quick final question. Is there any risk, do you think, out there from what you've seen or what could come, that company CEOs will use the label of the president's war on trade as a cover to raise prices and push it onto consumers?
Well, they can do two things. They can raise prices. They can also hold off on investments. One thing that the threat of the trade wars generates is uncertainty. It does raise real questions, like we're talking about, whether any of this happens. If so, how serious? It could be very serious if it does happen. And that does lead to some hesitation on investment. That'll slow down innovation, slow down research and development, and slow down the future growth of the economy. So I think this second quarter number we just hit was a spike, a temporary spike in the upward direction. The economy is already going to drop back closer to 2.5% growth in the second half of the year and beyond this year. And that could go down substantially more if companies hold off investing, if prices go up, if the Federal Reserve then raises interest rates faster as a result of the trade conflicts.